What is going on, guys? Welcome back to the channel. Hope you are doing well. And if you've been watching my channel or heeding my advice, you would have got this pullback spot on with the total 2 as an indicator, exactly where we rejected from back in December. And guess what? History repeats itself again. Welcome back to the channel. First of all, big up my sponsors, Mexi Global, Nansen.ai, and of course, the one and only Tangem. If you want to grab those, links are in the description. But let's get on with this. So a couple of weeks ago, I posted this. When Fear and Greed Index was going off the Richter scale, that 72 now is back down to 69 once again, and we're pumping. So like I said before in my introduction, let's enjoy the ride, but we need to play it smartly. Now, what I'm saying is this, or why am I saying this in this particular lovely moment? Because Bitcoin is holding strong, alts are also doing relatively well selectively. Not everything is going to pump together, as you know, but the macro doesn't care about your green candles. Of course, September is the date with destiny. Now, how do I know this? What am I talking about? So, ruthless and never ever complain about any form of profit taking. If there's anything bringing us back down to earth, and the name of the game from here would be sell what you can when you can. Quite simply, be ruthless and never ever complain about. This is when people were in profit. So we do have a massive insight into the macro. I've just published something quite important today. Jump into our Discord, $9 a month, become a member. You will never regret it. But let's continue with this because analysts are now coming out. Chairman Powell is absolutely stuck between a rock and a hard place. Of course, his 2 mandates are job numbers, inflation, both going off the Richter scale, and the job numbers will be scarier and scarier, as I predicted, once we start to enter the winter months. Coupled with that is the fact that the deportations and the pressure on from tariffs on earnings are all having an impact on the economy, housing. Man, there's so many economic data that are flashing red. But check this out. He is got it spot on.
Jackson Hole starting tomorrow as the Fed begins its annual gathering. Fed Chair Powell speaking on Friday, with no one quite certain what he'll say about the road ahead for rate cuts. Here with some insight is Mohamed El-Erian. He's Allianz Chief Economic Advisor with me here on set. It's good to see you.
Thanks for having me.
You think you know what he might do this week or say?
I don't. I think he will be inclined to maintain maximum policy optionality, and that's not what the White House wants to hear. That's not what many people in the market want to hear. He's also going to be pushed on the labor market. That's the topic of the symposium. And then finally, and something that we don't talk enough about, is the monetary framework. This is when he unveils the monetary framework.
Do you think that it would be a mistake to maintain this optionality? Why shouldn't he do that? We just came off a week in which we got some, inflation data that was at least a little bit hot, sticky if nothing else. How's he wrong?
So now we're starting to see the problem with excessive data dependency. He got 2 different inflation numbers. He got softer than expected CPI. He got hotter than expected PPI.
Absolutely spot on there, Mohammed, because the Trump tariffs, of course, are showing up, but this is not something Powell had a strategic, proactive plan for. He simply said, meeting after meeting, let's wait and see what the numbers are. Well, the chickens are coming home to roost. The economy is absolutely tanking. Bitcoin's crashing. And of course, the crash is inevitably going to lead to us seeing this level that I've been talking about. Again, I've shared this level on the VIP, but we are below the level where we need to be. What you're seeing here, ever so slightly, is an increase in the Bitcoin dominance. Now, if Bitcoin could have closed last night above $14,600, there would have been a slight glimmer. It's fighting today, but the volume isn't there. In fact, you are seeing resurgence in the last 24 hours of Bitcoin dominance from just over 58% to nearly 60% or approaching that. In addition to that, what you're seeing is a fall of Bitcoin, Ethereum dominance for the first time in a long time. Of course, a fall of the total 3. Again, this is dangerous because that is the exact rejection that led to this massive move to the downside in December. And we bottomed around 800 billion for the total 2. The total 3 as well is coming back down to sub or just about $1 trillion. But I expect that to come way under a $1 trillion. So about 900 to about 950 is the target. And that is where the institutional demand for the total 2 has kicked off. Now, in addition to this, the US M2 money specifically has broken the 2022 money printing highs, and we are now seeing a bigger uptake here. So you can see here a breakout, and we can see of course, this was the start of the quantitative tightening here, and this was the peak printing for the 21 cycle. Of course, this was COVID print from here, and you can see how significant that was in terms of unrelenting from, started to print. Anyway, the Fed was pivoting in December 2019, but if you really see the steep M2 US supply there, we are now seeing that actually break out for the first time in many years, probably three and a half years. M2 money supply now is at $22 trillion. So there are things to be hopeful about. There are definitely things to be worried about. Now, in terms of the Bitcoin price, people saying, is Bitcoin going to go to this level or that level? It's really hard to say so far. We know Fidelity has sold $3.5 billion of Ethereum in the last 24 hours. And of course, all of these will be looking to take significant profits. But what we're seeing here in the Bitcoin price is really, from an institutional demand perspective, we're not seeing any significant barriers. If we drop to this 111 to about 110. There is an area here where you can clearly see Bitcoin does have a bit of price action in this range. But if you look at the other chart, you will see that BTC USDT has institutional demand exactly where it's at on the 4-hourly. That's why we got the bounce. We can see the massive sell-off there. That is an institutional order block. Of course, we needed to remain inside this potentially 14,600. We really, really needed a daily candle inside that box. And you can see why people are really scared right now. 11 hours, 47 minutes to go until the next candle. Could we have a miraculous, but the volume is not there, guys. The conditions are not there. So what are we seeing in terms of an institutional demand side? Well, let's have a look at the order blocks, because these tell you where prices is likely to bounce from. Don't listen to anyone. So 107 to 105 is a very strong area of interest on the daily trading time frame. 4 hours, you'll get one block now. That's why we bounce towards the yellow box. Again, you can see these institutional order blocks, bullish or bearish, always the price responds to them. And then from there, what we have here is another level between 105 to about 100. And then below that is 92 and whatever, 93. But these tend to change on the time frame you're looking at. But what you're seeing in the short term, if I just remove this yellow box, is a huge sell pressure on Bitcoin, on the hourly. So even if we say attempt to come to this level, and I'll just clearly show you what the price is doing. Okay, so price comes here, and then likely the price will react to that, and then maybe go and search for that institutional order block to the downside. All right, you could clearly see that if we come up here, then the chances are we come back some more. So essentially, where can we hold price is the key. Do we want to break below 110 or 112? Anybody knows, or it's anybody's guess. But what we are seeing here on the different time frames is different levels of institutional order blocks, and these tend to act as support or resistance every single time, all day, every day. So take the emotions out, sit back, relax, and you never know. Bitcoin volume comes in on a New York session. You may attempt to get above this 1460. That's the level that I pointed out previously, right here. But it looks unlikely. It looks like it will be absolutely rejected there, and we could be further going down. So overall, the Trump's tariffs problem, he might need a third, fourth, or fifth term to actually work through what is going on. Now, it's interesting. Yesterday, Plantier, okay, so you need to look at a few companies to actually get the temperature of the US stock market, right? So if you look at this on the daily, so this is one of the top stock, Plantier Technologies, and this is what it did yesterday. It still has way to go. And if we look at Nvidia did the same. So this is not crypto isolated crash. This is purely designed. Of course, I told you all about it, talking about liquidity. But on the daily, let's have a look at the weekly. Look at that. I mean, look at Nvidia on the weekly, guys. This is why these types of charts are very, very dangerous. So this is being up only, but the volume is literally, price is rising and the volume is dropping. That is what is known as bearish divergence, guys. So you're starting to see, if the price was dropping and the volume is climbing, that's normally a good sign that the price is about to take off. But when you have the likes of Nvidia doing this, and again, Nvidia coming down to 170, 160 is a real possibility, especially those 160, even $148. And the reason I'm telling you that, this may give an opportunity for Bitcoin dominance to get back inside this channel and spike up again temporarily. And if we look at a different chart for the Fear and Greed Index, across the board here, greed is starting to come into the market. Of course, the absolute max fear is going to be always something that we need to consider and we need to watch. But let's change these to different time frames, and you start to see, okay, what we're doing is Fear and Greed Galaxy score here going up. And again, it's still way to go to come down because things are still a little bit frothy. Now, in terms of the crypto Fear and Greed Index, we're probably looking at, let's see, that one's always tampered with. Don't really check Binance for that. But what we're probably seeing here is a picture on CoinStats that's around 45. Now that's ridiculous because when I made that video that I was referring to earlier, the market is now fully coming down below. Yesterday we were in full greed. Today we are in fear. But look, it still has way to go. So don't get shaken out. Check out the DXB Discord. We've got an unbelievable group of investors there. I'm proud of every single one of them. I think those guys are just ridiculously good. And you can join us for really for $9 a month. Now, yesterday in the VIP group, I dropped this chart and I said to the team, guys, we are currently relying on this bearish downtrend to be broken on the US dollar. So the US dollar, the chart is now 11 hours to go before it closes. If we have a daily close candle above this long-term bearish trend on the US dollar, then that's a confirmation that this number 4.1% will continue to go higher and we are in trouble for the short term. So what you're seeing on the 4 hour is it breaks above. Now it's in the process of retesting, right? And then that is where the confirmation is. But you can actually see the sell-off there, resistance on the US dollar right there. Let's just hope that holds. But it looks like it's coming in for a retest for the last kind of 8-10 hours. Went into an all-time high of about nearly 4.5%. But now it's dropping down. So here's your full stack. Jackson Hole, all eyes will be on Jackson Hole from tomorrow. And then on Friday is going to be your most volatile day where the Fed chair speaks. So guys, stay safe. Check out the Discord. Come in, take our investment plan absolutely for free. You would have paid thousands of dollars to actually get a proper lifelong investment plan, which I just published today. I'm going to keep refining that. Anyway, stay safe. Absolutely, these markets will come and go. Crashes will happen. Your mental health is more important, but understanding which way the money is going to flow I told you weeks and weeks ago that the market, there's no money in the market right now. The Fed has to absolutely pivot. We have to go to a risk-on environment. The chart that I'm showing you right now is indicating a risk-off environment. So right now is a good time to actually define what your top list is. Again, hope we get rejected, retest, and of course, it breaks down from there to go back into the bearish pattern. Let me know your thoughts. Let me know how you're coping. Stay safe, and I will catch you on the next one. God bless you, man.